Hi everybody, this is Gary dealing with Sentiment Timing, and this is our free technical video report for January 7th, 2020. It's been a while since I've done a free report, and I'm going to go over why, actually. So back in November, Woody had put out, and you can see that in the actual email that I sent, you can see the report, that, we were going to see a market-friendly environment that was going to head us into January, and it was pretty much a melt-up, and there was not a whole lot really to go over. And I just didn't want to waste anybody's time on it, but it's pretty much exactly what has taken place. And with the predictive analytics model, we had some technical divergences, but as far as what was going on with our with the seasonality, as well as when Woody was looking for the next top, it was market friendly. And this was from our November 5th report. The interim profile is friendly into at least mid-January. So that was, 2 months in advance, and basically what took place was that. And what we were looking for was some type of extreme to figure out what I'm labeling as a wave 5 of 3, which I'll go over in our regular reports. But this is one of the reasons, since the November 5th, we had seasonality, as well as the next turn date that was going to be the top, that was going to be in mid-January. So you can see when we had that dip in September, October, this is what caused the low. It was a 2% sentiment reading and a 3% sentiment reading. So everybody was bearish on the market. From that, we had our melt up, and you can see we didn't get past we didn't have an extreme bullish sentiment reading until we got above the all-time highs, and I will show you how everything else played out. But with our predictive analytics model, for anybody that's new here, it basically goes off of time, and those are Woody's turn dates that he looks for. So that's when to start looking for a trend reversal. Sentiment is why, and what that means is the majority of traders or investors are going to get bullish and bearish at the exact wrong times, and then what we do is look for technicals as far as where the price will reverse. And what I've been using right now is Elliott Wave, and I'll go over that in our regular charts. But short term sentiment, we're into euphoria. We're still there because we haven't really done a whole lot. And with the intermediate, we're in euphoria. So everybody is really still bullish on this market. They're still looking where to buy. And this is really what we're looking at as far as from a sentiment, where I showed you we had our two lows, and this marked a low. And the thing with sentiment is they're two different animals with bearish and bullish sentiment readings, meaning that you're typically only going to get a couple extreme bearish sentiment readings before a low is made. But if you notice, it takes a series of bullish sentiment readings before a top is made, and those are your V bottoms and your kind of rounded tops. But you can see as we headed up here, everybody's bullish on this market, and this is what we put in our last report is that the upside was scheduled to be ending in its ending phase, and it was supposed to be in January. And what happened was we had a harsh reversal on Friday, and we have new news as well as a 98% bullish reading. It's all argue for a tactical top. So this is where everybody's bullish on the market again, just as we were running into the time period that we were actually looking for a top, and that was coming all the way from November. So you can see until we got up here, this is where everybody started getting very bullish on the market, and now we're looking. Members already know when to start looking for the low date. So most likely, what's going to happen is we're going to get some backing and filling. We're going to get into some extreme bearish sentiment readings, and we're going to know, what to be looking for, because then we'll just look at our technical analysis to figure out where the low will be, and that's what I'll go over right now. But the important thing is knowing when this low is going to come into place, because most likely it's going to be some kind of capitulation before that low is made. Everybody's going to be bearish on the market for whatever news is going to be hitting, and that's going to be the perfect time to buy. And it's going to be vice versa. When we start getting up, we're going to be start looking for the next top date and wait for sentiment to get to extremes. So if we take a look at our regular charts here, what I've been really showing is that I'm looking at this environment as we're forming some type of wave 5 of 3, and this has been in place, and I've been saying that we needed some type of confirmation that the 5 of 3 is in place, and we actually still haven't gotten it. But as far as time wise, it is due for a top. We know that from that. We know sentiment is high. So right now, from a technical standpoint, what we're really looking for is a break of that 32.11. This is your short-term range, where the bulls are going to have to get it above the, this is a little bit of a larger range, but the bulls are going to have to get it above the 32.59. The bears are going to have to get it through to 32.11. If they do that, reaction trade will be down to the 31.85, more likely down to the 31.63. And the reason why that makes sense is also we have the 50-day moving average at 31.44. But if you notice, we don't have any bearish divergences from this top right here. So this fits the wave 4 down into where Woody's looking for that low. Everybody's going to panic in this market, and from there we're probably going to have a wave 5 that's going to take us up to new highs. And that's where things get a little tricky, because when we're in this phase right now, there's really not a lot to talk about, because we're in the melt up. Everybody believes they know what's going on, and then from there we get a quick wave 4 down. Everybody panics, and then that's going to be the perfect time to buy. So even though we are looking for some type of top right here, from a technical standpoint as well as Elliott wave, it should be a pullback before we make new highs again. And some of the target areas, depending on how deep it goes, one would be 30.40, and then some of the other areas would be anywhere from the 31.63 down to the 31.04 would make sense. And you can see we also have a lot of gaps here, so a move down somewhere to the 30.93 level would make sense and also fit the profile for the wave 4. But remember, just a wave 4 before we make the wave 5 to new highs. So anybody that's been really looking at us and saying that we're only bears and this and that, it's totally not true, because we've really been bullish on this market since the going all the way back into November 5th, which is right here, and you can see it was a massive move to the upside. So right now, what we're looking at with the shorter term, this is just a short-term range where if this wave 5 of 3 isn't complete, the bulls are going to have to get it above the 32.47. If they do that, most likely we're testing these highs. But again, the bulls are on borrowed time right now. If the bears can get it through the 32.31 level, there should be a reaction trade down to the 32.11. Below that is when we start looking at some lower targets like the 31.88, and then really the bull bear lines down at the 31.60. So we have a lot going on right now. If you guys are interested in learning about when the next turn date is coming, we have a 12-month special that's for $1,200. It's a $600 savings. Or you can do our special number 2, which is $299 for 90 days. Just use coupon code 100SPX, and hopefully we'll see some volatility hit this market, which I believe we're going to, based off of the turn dates and what's been going on with sentiment. And knowing when to expect the tops and the bottoms is exactly what's going to give you an advantage over most other traders. So with that, have a great night, and I'll talk to you in our next report.